It's not exactly how it works, so I want to fill you in on something. So, if and when the Fed does lower rates, now they already dropped it a quarter point last week or so, if and when they continue to drop rates, there's going to be two different things that are going to happen. One is as the rates come down, which again is going to be a gradual thing. It's not like it's going to happen overnight. They're not going to drop the rate an entire point in a Fed meeting. Probably not even a half a point. Definitely not 3/4 of a point. So the rates will come down slowly over time. However, if and when that does happen, however, this is what's going to happen. First thing it will do is it will bring more sellers into the market, because there's more sellers that, well, they're like, hey, I don't want to sell my house at a 3% interest rate on my mortgage and then buy a house at a 6.5% interest rate, right? But as rates come down, closer from that 6.5, maybe down to like 5, 5.5, whatever the case may be, you are going to have sellers that are going to come into the market, and they're going to say, hey, I'm ready to sell my house now and I'll buy something new. I've been waiting, but I'm ready. The time is now. That's the first thing that's going to happen. But the second thing that's going to happen is it's also going to increase the number of buyers that enter into the market, because the buyers that aren't willing to pay 6.5% for a mortgage on a house, especially those higher priced houses, once the rates come down to, let's say 5.5%, let's say 5%, let's say even lower, now you have all these buyers that have been sitting on the sideline that are going to come into the market as well. So it's not like home prices. The way that home prices work are, home prices are based essentially on the number of sellers and the number of buyers and the balance there, right? So if there's an extreme number of home buyers and there's no home sellers, you're going to have a high demand for a product where there's not a lot of inventory, and so prices are going to be extremely high. But if you have almost no buyers and you have a ton of sellers, you have a huge inventory, not many buyers, not much interest, prices are going to be low, right? But in the case of rates lowering, what's going to happen is it's going to increase the number of buyers, as I talked about, and it's also going to increase the number of sellers, as I talked about. Now, those numbers might not be exactly equal, but they're going to be pretty comparable. And so the end or net result is that home prices are probably going to remain relatively steady related to interest rates. There are other macroeconomic factors that can influence it, but as far as interest rates goes and the Fed lowering rates, we are not likely to see a huge drop in prices if and when the Fed does lower rates. And we've seen that already. You know, rates coming down from mid sevens about a year and a half ago into what we're in the low to mid sixes now, right? So it's come down over a point already, and we're not seeing a huge drop in home prices. In fact, most places we're still seeing prices go up. So if you're someone that's been, ready to pull the trigger, but you're waiting for prices to come down, you're waiting for the Fed to lower interest rates more, I would not wait for that personally. Unless your situation is such that you need to get a low enough interest rate that you can actually afford a mortgage.